Okay, everybody. Well, we had a pretty crazy week, last full week of the trading year, and I'm going to do what I like to do, which is just go in this raw. I haven't even looked at these index charts for days, actually, and so I will be thinking out loud as we go through these, and let's see what we can discover. So these are the 12 index charts that I follow. So let's jump in. Begin with the Nasdaq Composite. Now, the big deal this week is that we've had some major trendline failures. This trendline was anchored to the August 5th bottom, and it is held intact for August and September and October and November and most of December, and then blammo, this week happened. And this is the first meaningful trendline break. I was glancing at this one, of course, but it occurs to me I didn't even draw this one. And in other videos, I've talked about how we've been dealing with sort of a trio of breaks. So let's just tweak this a little bit. No, that's no good. Let's go to the right. So in this instance, we had the most recent failure was here. And that started a nice couple of week chunk down. And likewise, we had a break here, and same idea, a couple of weeks where it managed to actually fall. So in this instance, my best hope, my most ambitious hope, would be that we close the election day gap way down there, which is not quite. It's about 1,000 points down from where we closed on Friday. And I would say, and I'm not going to spend this much time on the indexes, I'm just saying some broad general things. I really want to emphasize that we are in a very special and unusual time because there ain't nobody minding the shop. We are effectively between presidents. I mean, Biden, everyone's completely forgotten about. And it's sort of funny because you'll hear Congress talking about, well, we've been in touch with the White House, and they mean Trump. So he's kind of already there in everybody's mind. You know, the inauguration is a month away, but he might as well just move in because he is effectively the president now. In spite of that, there is no real president now, and they just, no one's going to do any emergency bailouts or emergency anything. We are actually having a bit of an organic market again, which is why we actually managed to have some droopage on Wednesday. So I think it is not out of the question that we could hammer down and seal that gap up, is what I'm saying. Here's the Dow Jones Industrial Average. Now, all kinds of cool stuff here. We had... what was this, like 11 days in a row down? In fact, I think we had maybe 12, it looks like 11 or 12 red bars before we got that massive reversal on Friday. And the nifty peachy part about the reversal is that we beautifully sealed up this gap. So that election gap is sealed. But we had a span here, which is very, very cool. This is the shortest term trend line. This is again the August 5th trend line. It was broken with quite a lot of fireworks on Wednesday. Look where resistance was. We got just about up to it. And we were up obviously about 500 points, but we shed some hundreds of points before the close. So it's very interesting that was resistance there. That makes a lot of sense. Nasdaq 100. This probably won't be crazily different than the CompQ. And in this instance, once again, well, no, not once again. No, it is once again. There's that August 5th, the August 5th trend line. That's kind of universal. And we teased a little break on Wednesday, just barely. We closed below it Thursday. We opened way below it on Friday and then rallied. But look at the resistance. I sound like Biden. Oh my God! Look at where we closed on Friday, right at the trend line. I'm not kidding around. Right at the trend line. Isn't that spectacular? That's very exciting. And if we fall, then there's a couple of key support zones. One is the channel, which goes back 15 plus years. That's the midline to the channel. And then, importantly, the frequently mentioned election day gap. S&P 100. Zooming in. Back to our old August 5th friend. Very similar situation. A failure on Wednesday. Another red bar with resistance at the trend line on Thursday. And a big rally with resistance at the trend line on Friday. This looks like it is dying to go down. It seems so vulnerable. And, you know what I'm going to say, election day gap right down there. That would be the pitch perfect place for it to bottom before the calendar year is over. And there's not much time left. We've got, let me just look at my physical calendar here. We have, it looks like 6 trading days left. 5.5 really, because Christmas Eve is a half day. So 5.5 trading days is all you got left in this very, very bullish year. Russell 2000. This was cool. This was the lifetime high here, back on the 25th. In fact, we might as well honor it by moving that Fibonacci up. And then it was like sinkage, collapse, more sinkage. And then this kind of feeble rally. The high on Friday was pretty much the same as the high on Thursday. Very feeble. The Fibonacci here is just beckoning to be touched. Semiconductor index. Wow. See, that's why I like to do this raw. All kinds of kind of eye-popping stuff coming out. Look at that terrific symmetric triangle there. And we teased a little bit here too. A little bit of a failure, but not really. Hey, fellas, how about break that for real next week? Wouldn't that be cool? S&P 500. And here we have the failure of the August 5th trend line. Another red bar on Thursday. Big old bullish engulfing pattern on Friday. And the peak, the high on Friday, right there, almost reaching the broken trend line. And I'll mention as an aside, I'm very, very, very conservative when it comes to options expirations. I'm typically at least 4 months out. I did something kind of kooky. I bought a bunch of December 31 Spider puts. And I got them at a decent price. And I sold 30% of them right at the close at a good profit. I'm going to hang on to the other 70% just as a goofy, gambly trade. Transports. This is nice because it's failed. This was rather worrisome a few weeks ago because it looked like the Dow theory folks were in good position. The utils were strong, the trend was strong, the industrial was strong. That's all changed. The transport's a big old piece of dog poo again. We have completely sunk and slumped into the pattern. That is a bullish failure writ large. Here is the utilities, which again looked sensational a few weeks back. Now they look not sensational. And we have topped out nicely on this one with very strong resistance, I would say, round about the lovely big round number of 1,000. The VIX was crazy. We exploded on Wednesday. Thursday still staying high. And Friday collapsed from 26.51 all the way down into the teens again. And we closed back in the teens again. And amazingly, it was just a few days ago that this thing was like, it was threatening to go sub-teens on us. So absolutely bonkers. Hopefully this one spike won't be the end of it all. It'd be kind of cool to have one last thrust. XBD, Broker-dealer index seems to be a cute little top up there. Little dainty thing. And you can see the same reflected in XLF, by the way. And our last one, XOI, oil index. Beautiful head and shoulders pattern. Big old failure there. We could rally a bit on this back to the neckline, and that would just be begging to be shorted. And with the dogs howl in the distance, that marks the end of this, and I shall say fare thee well.